All right, good morning, everyone. It is 8:46 in the morning of September 23rd, 2022, and this is my pre-market strategy session. So today I will be looking for an opportunity to cover, and so essentially I got the signal I was looking for. Let's see, that was Wednesday. Yeah, that was Wednesday. Got this massive rejection of 291. It went up a lot higher than I was expecting on the Fed speak day. And I was patient and waited for my entry, and it came to me. So I think I titled, yeah, I did. I titled that video, Wednesday's video, Three Strikes You're Out. And we got it. I just moved that by accident, didn't I? To 291. 288. I moved this line by accident. I don't know what I did. Yeah, I moved that by accident. Where was that? Darn it. I think it was up here. Yeah, it was. It was at 294-ish. Okay. All right. Yeah, so here, what's going on here is I had this day down here where it closed below and then consolidated for a few days, and it kept bouncing. So here on the 19th, it hit 291, which is the close of this day from the 15th, and then opened lower the next day. Came up, hit 291, and it hit just shy of 291.10. The number I have is 291.10. On this day, it went up as high as 291.06. And closed below it again. And then on Fed Speak Day, pretty interesting day there. I usually don't trade Fed release date stuff, but basically, Powell started speaking, and I think people are just happy to see Powell at the podium and saying something. I don't know, but I sold the close into the close on Wednesday here as it broke back down below 291 and actually got a nice confirmation candle here below 291, and this is where I started pressing my shorts right here, and so essentially what I'm looking for today is a move down to 271.39, and it's really quite simple. So I know there are a lot of lines on here. Here's the sort of downward channel. These two red lines indicate a downward channel that we're in. And a breakdown below this channel, I mean, it broke down. Here, let me auto zoom here and stop doing that. All right. And you can see it broke down below this region here for a while and then came back up above it again. And so essentially what I'm looking for today, I am looking for a breakdown below this support, could be considered somewhat of a support line. And if we start hitting 271 today, I'm going to start covering my shorts. So it'll be a nice little trade. I did start putting on shorts back here on this day on the 13th of September. And held right through here and then started adding again on Wednesday. And my destination is 271. And simply 271 is this low over here. There's going to be support at that low. I don't know if it's going to be just intraday and lasts 10 minutes or if we're going to get like 5 days of support off of this low right here. However, that's just where I want to take some profits. I am going to leave some on the table. I have first in, last out. So, I'll be taking profits on the most recent trades that I've entered right here. And then let my more long-term, it's only by 5 days, puts, I'm going to let them run. They're pretty far in the money. So, it's okay. I can take some short-term profits, and then let the long-term move run its course, and I'll see. If I start getting if we start getting back up above 291 again, then I'll let go of the other the trades that I put on before, and so I can get out of those with a nice little profit. The yield curve is still inverted. Here's the monthly chart on the yield curve. We have 1, 2, 3 months inverted now. And this can go on for quite some time. The inverted yield curve, as you can see back here in 2007, it did go inverted for 1 month and popped up again, and then stayed inverted for, and bobbed around the inversion there for about a year. In 2001, actually about 18 months total. Actually, the total bobbing and getting down below and back above and so forth of the inversion line there happened for 18 months. And then in 2001, it was 12 months. And it's not until the yield curve started to normalize again that we got the real crash in the markets here. So we are, we're going into it. The lowest inversion on this chart that goes, this chart goes back as far as 1988. That's not the longest, that's not the deepest into history I can go. Only on these, that's the furthest I can go on these charts. That's not the furthest back the inverted yield curves go. But anyway, this can last, another 9 to 15 months. We're only 3 months into the inversion here, and once this yield curve starts to normalize, I'm going to be going bonkers with the shorts. I'm going to be taking probably outsized, a little bit more risk than what is considered conservative. I'll be taking more risk in that time frame. So until this yield curve starts to normalize and starts to run up, I'm going to stay rather conservative on my shorts. Things are bearish, and I think that if the market is going to be bearish, if we're heading into a normalization on the yield curve and it's already bearish, then we're going to see really quite impressive crash moves once this yield curve starts to normalize again. So I'm sitting tight. I am looking for opportunities to short, so I am selling the rips and buying the dips. And once things start to normalize on the yield curve, then I'll be taking a lot more risk. So for today, the Qs are the only thing that I've been really shorting, although the SPY has also been a great spot to short, obviously. It's just that the SPY contains industries that are considered defensive, where the Qs have none of that. Qs have no defensive industries or sectors. VIX, the risk range on the VIX is at 30.08. So we're getting close to the top end of the risk range on the VIX. It seems to me that whenever the VIX starts getting into the 35 range, starts hitting 35, it gets beat back down again. And I think that's probably going to be the case for quite some time. Probably the next year to year and a half, or somewhere between 9 months and 15 months. The VIX is going to bob back and forth between 20 and 35 roughly. And so 35, the VIX might even be a better gauge for covering shorts than a price level on the Qs even. And the Qs here, it's just this most recent sort of low here on the Qs, and that's the only thing I'm using in order to cover. That's the target. I think that it's going to go lower than that, actually. So it'll be interesting to see what happens if price action just slices right through that 271.39. Then I'll look for a retest of 271.39 to then start adding more shorts to my trading position. All right, everybody. That's pretty much it for today. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell. And I will see you on Monday morning's strategy session. Have a great weekend.